So over the past few months, you might have seen some announcements surrounding EV stocks like this, or even this, and many others similar to those. Or maybe you woke up this morning and saw another ASX Graphite Stock, Syrah Resources, with an announcement like this one, with Joe Biden's U.S. government pledging further support for a loan to help them develop out their graphite facility. You might be wondering, why are companies like Syrah Resources, Lynas Rare Earths, Renascor Resources and many others getting so much support? And most importantly, what do these agreements mean? And are they really a big deal? Well, today we're going to discuss these questions. We've distilled down the importance of these agreements to 3 key factors, and today we're going to unpack those together. Thank you for joining us. Welcome. If you are new here, it's great to have you join us. Let's get straight into it. So I guess before we unpack these 3 key factors about why these may be important deals for the macroeconomic space surrounding these EV battery material commodities, it makes sense for us to discuss, what are these agreements? Now, what's important to understand about this is, first and foremost, they come in many shapes and sizes. There is no one uniform agreement, and it differs between regions, it differs between the types of agreements and facilities with how they're set up. But ultimately what it comes back to is governments around the world are pledging their support, both financial and non-financial, to help to facilitate this decarbonisation trend and this electric vehicle adoption with many of the key resources and commodities that will help to fuel this transition. To give you some names that you might be familiar with, in Australia we've got the Modern Manufacturing Initiative. Over in the U.S, Joe Biden invoked the Defence Production Act for further funding surrounding critical minerals. While over in Canada, there's been a potential pledging of $2 billion Canadian for an electric vehicle supply chain. And so it gives you an insight into the fact that governments around the world, and of course these are not the only ones, are now looking to match the corporate investment that we've seen from many of the OEMs and vehicle manufacturers who are really starting to see this electric vehicle transition pick up pace in front of our eyes. And so with that backdrop then, it then brings us to the question, okay, so these agreements, these facilities, these supporting and pledging of loans, why are they such a big deal and what does it actually mean for the broader macroeconomic space? Well, as mentioned, we've distilled it down to 3 key considerations. First and foremost, the localization of supply chains. Secondly, the fact that there is government support and it's coming in significantly. And then thirdly, most importantly, we know that everything in the commodity space is supply and demand. It's economics 101, but this really speaks to the fact that there is significant demand, but also the question about, okay, where will the deficit end up sitting for many of these commodities as has been forecast? So that brings us to the first consideration, the localization of supply chains. As I'm sure many are familiar with over the past few years, if we've learnt anything from firstly the pandemic, then the supply chain bottlenecks, the mobility restrictions, and of course everything playing out with Europe, we've seen that supply chains are not infallible, and it is important to build out localized and resilient supply chains to be able to deal with any exogenous shocks that may flow out. For further insight into where we're currently sitting for many of these commodities that are needed for the decarbonisation and electric vehicle effort that we're seeing, a lot of extraction, but particularly the downstream processing and refinement is done in Asia, with a lot of it focused and concentrated in China. Of course, for a bit of a case study in Australia, as we know, in Australia we do a lot of the extraction and the mining of the raw material of lithium, for example, and then we send it off and then it's refined further down into battery-grade chemicals in China. But that happens for a lot of different commodities as well. So there is now a focus on building out these resilient supply chains, not only building them out and localizing them onshore, but also capturing more of the value add and the margin and going further downstream into these nations. And so this type of funding and support is one way to help to catalyze investment and the development of projects in nations around the world, whether it's in the US, in Australia, in Canada, or other nations. And so as we're seeing governments look to co-fund these projects to provide further support to catalyze industry onshore, we're seeing this discussion about the localization of supply chains and building out these resilient supply chains getting further and further up in the levels of importance. And so building on top of that, the second dimension that we want to discuss is the focus from the governments that we're seeing to really support this decarbonisation effort. We know the ESG discussion, this decarbonisation effort, is getting more and more to the forefront of the global and societal conversation. We're seeing a lot of corporates really investing heavily into it. We know that the net zero push is only going to grow in importance, and obviously bringing down the embodied energy that goes into supply chain and the ultimate production of products is going to be first and foremost at that discussion. But seeing governments really get behind it, being willing to fund this, it's one major tick of validation. But what we're also seeing with some of these types of agreements, and as we've mentioned, all of the types of deals and support from different governments around the world come in different shapes and sizes. But for many of them, it's not only the financial component, maybe it comes in the shape of a loan, but a lot of them have further support as well, whether it's resources, capabilities. Some of them come, if they come attached with major project status, potentially have the promise of accelerated approvals or support and guidance through navigating the regulatory landscape. So all of this helps with not only the onshoring of talent, but it also helps to facilitate these projects coming online in a matter as quickly as possible, because we know, and this leads us on to the third discussion, that there is a supply shortfall that's forecast for many of these commodities that's likely to only continue to be exacerbated as demand rises, but supply can't come online fast enough. And so that leads us to point number 3 then, which is that supply and demand imbalance. Of course, governments wouldn't be investing unless they saw a significant demand that's only likely to continue to rise in years to come moving forward. However, even if demand continues to rise, if there's a sufficient supply that's able to fill in and satisfy that demand, well then there wouldn't be need for new projects to come online. But where we're seeing so much investment going into the space, it's evident that the governments and nations around the world are seeing there is an importance to be able to satisfy and fill in this demand, because it is going to be critical for this next stage of the transition that we make as a global society. It is an acknowledgement of the potential deficits that we're seeing, and obviously the critical minerals are not all made equal, whether we're talking about lithium, nickel, graphite, copper, cobalt, or any of those in between. There is a broad range of them across the rare earths and many of these other commodities, and so they're not all made equal. But what we do know is that as demand rises and supply struggles to keep up, we're going to need to see as many projects can come online as possible to help to satisfy this demand, and particularly if there's going to be more and more focus on these localized supply chains. It's a very fascinating time. I'd love to know your thoughts on it all, so drop in a comment if you're interested in getting more of an understanding into some of these different mechanisms and facilities that have been developed for funding. We did a video deep diving into Biden's critical minerals funding announcement, which you can check out here. Thank you for joining us. Make sure you like, subscribe, turn your bell notifications on, and we'll catch you on the next video. For now, stay well and happy investing.